The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And after a bit of a vacation, well, a working vacation, but a vacation nevertheless. And of course you get back, everything seems to be set, and suddenly you get very slow internet, gets very frustrating. And then out of the blue, this particular monitor, the whole computer system that I've got here for the show, that particular desktop computer, suddenly shuts down. I just haven't seen it, never touched it. It just shut down by itself. So I'm getting it all back up. So let me do a couple of things here. Number one is I needed to see in the Chapman Wave methodology, we made a peak C by just less than a point on Friday, not making a new recovery high of the high of Thursday. And what happened was the Dow, the ETF, the S&P Dow Diamonds, went to a leg C, and this is so frustrating. So what happened here is that I've got TradeStation. They got a new thing here. It says TradeStation Trading App Store. I was on the phone all morning trying to get through to them, and they must have been backed up. I don't know how long. I couldn't get on. I want to know why does this thing start moving before all the charts come up? I don't need this. I don't want this. Why is it there? Well, I'm going to just have to wait a few seconds here before that comes up. Then I can go to my charts. Then I can log in, and we'll get the pictures. So this is what I'm going to do. We needed a leg D in the Dow Cash Index, the Dow Jones Industrial Average. It did that this morning. We've been long since Monday a week ago at the opening. We had gone short just very briefly for a day, got stopped out, went back to long, and I wanted to see a leg D. What I said to subscribers, if we get that leg D above, 25,615, I think it was, 0.09, I'm just trying to do that by memory. If we went to 0.10, that started leg D. We will raise the stop on our diamonds. We're still long there, just a small amount in the semiconductors. We're long a Dow stock. We're long a brokerage stock. We're still long the dollar. I have implemented in two areas the chance of going short if certain parameters are hit. I don't believe they've been hit, at least in the one. I don't believe they've been hit. And if that is hit, then all of a sudden we are going to be looking at the downside. But at this particular point, and it's so interesting, being away from the market, trying as much as possible to kind of separate yourself from news events. Here we go. From the news events, what happens when you ignore the news? You're looking at the charts. The technicals are all saying things are looking very good on the short term. The medium term weekly charts are looking very good. The monthly charts are looking very good. How on earth are we going to be able to trade this? Well, what you do is you put in levels of support and resistance, and you treat it as if it's just a regular old day. You do not know that there are talks going on. You do not know that there are geopolitical conflicts going on. You do not know about tariffs. You're just looking at the charts, and the charts, lo and behold, are about to come on. They are there. Hopefully people in the general will be able to say, we can see your charts. I hope they can see them. And we've got the Dow up 48 at 25,364. You've got the S&P up 9 at 2788. You've got the, I can't see it right now, but most importantly, I'm looking at the semiconductors at 108.85. It's down a little. It had around the SMHs, the market vectors, semiconductor index, had a round number recovery high of 112.00 on Thursday. And then it took a bit of a hit intraday, had a sharp move down on Friday. Then the market rallied towards the close, and the SMHs rallied, the semis rallied, and they help the QQQs. So now what's absolutely imperative is that there are levels to look at. Now that we've got the leg D up, here we go, the charts are up. Looking at gold up to at 13.05. The dollar, if I can get that right now, the dollar is holding steady. Is this going to be quick or slow? I guess it's going to be slow. There, not too bad. Okay, the dollar is down 0.07. It made a peak F top, and now I lost the notation. 95.03 on the 29th of May. It's pulled back to the 93s, holding at the 93.48 level. I love the weekly chart, still looking very good. Let's just go to the numbers now. I want to go to the QQQ before we go to the break. And the chart shows 175.16, up 72 cents. It's got to go above 175.93 to accelerate towards the upside. Leg C in the weekly chart of the NDX Power Shares QQQ Trust Series. And I'm looking at a leg C. I'm calling this a C for now in the weekly chart. Oh, I had this all notated. I lost them all on the Qs. A cup formation. We'll see if there's going to be some kind of a double top. Now, let me just do this. I'm going to go to the Dow. I hope I haven't lost all that notation. That's been so long doing. Look, yep, I've got it. 120-minute chart made a peak C. Chapman wave 3, pulls back Chapman wave 4, and then it starts a leg D and a Chapman wave 5. It's in that right now. Very nice action. The weekly chart, the 120-minute chart, technicals, the MACD is good, and stochastics at 94%. Look at the daily chart. This is what I really wanted to show. We've accelerated to a leg C. I've got a left side, right side price time match to the 25,449 level. We're still way under that. We're at 25,364. The high today is 25,373. But in the Dow daily, I didn't put that in. That's a leg C. This is a leg D. And what's really important about this, if you move to the chart on the right, you will see, capital D on the way up, the webinar that I'm going to give this coming Thursday night is just so important. Why? Because we have some divergences. We have some divergences in the sense that within the context of within the Dow even, you've got some areas that are acting very well, and you've got some areas that are really kind of sluggish. I'm going to go through those. We've already put our portfolio in my opening call in the Traders Corner section. We've already got positions that we are thinking they have a good chance of surviving any real big pullback in the market, and then when the market comes back again, recovers, they should be leaders. I'm hoping that's the case. Hope isn't a word you want to be using in the stock market. You want to be putting in positions and say, good, now let's see what happens. That's kind of what we've done. We've put our positions in. They've acted very well so far. Let's see if that can continue. So I needed to show you something else. The IWM, which was leading the cause all the way up, going into IWM. Oh, I didn't mean to do that. Let's change the chart. Here we go to the break. IWM. I think of the time. There it is. Up at 166.73, up 21 cents. It needs to break nicely above 167.23, Thursday's high. And that'll be very interesting going to a leg E. But the weekly chart is very strong. Basil Chapman, Tiger Conditions Hour. We'll be right back after these important messages. Down to 47.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Everything's set. Gosh, you know, technology, we get so used to it. I remember a time when I used to have to start the download on a Friday, the moment the Dow closed, and Monday first thing, about an hour before the market opened, all those thousands and thousands of pieces of data, millions actually, had come up, and I was finally ready to do the next week's analysis. That's how long it took. And now to have the frustration of a sudden kind of a meltdown, we get so used to speed in everything. So anyway, I was asked about the IYR. Let me get to that because the person has to leave very soon. It's at 79.48. This is the iShares Dow Jones US Real Estate Index Trust. This is the commercial real estate. You know, it's SPG, which is SPG. And you've also got Boston. It's got all the malls. Why am I forgetting? Oh, Simon Properties Group. So it's got a whole bunch and are very important real estate. The commercial, basically we think of them as income producing properties. So IYR trading up 7 cents at 79.49 in a leg C. It should go to D. Everything about it says it should go to D. I went through this actually over the weekend. I liked it very much. Let me put this in. I put it in before my, when I lose my data on TradeStation, it's such an incredible system, TradeStation, except when I lose my data, I lose all my notation from just all the stuff I've done over the last, say, 2 days. And then it goes to another file, and I get files from 3 months ago. So other stuff it's horrible. It's not their fault. Maybe it is because when it shuts down, it should automatically save. It's just too quick, I guess, and that's the issue. All right, so leg D in the weekly. This is a good retracement in the monthly chart. I like it very much. I'm convinced now that until the market starts a major sell-off, yields are going to be up in the higher range, and as such, the IYR is being helped. As I'm looking at it, the support, you looked at it as a longer-term buy and hold. I'm just saying to you, I like it very much. The 78 to 77 area, the 200-period exponential moving average in the daily, 75s in the weekly. I don't think it's going to the 75s in this move. I think that there could be a pullback, could go just under 78, and then it might start another rally. But I do expect that there'll be a D first, and it should be this week. It might be independent of all the stuff that's going on internationally. So I like it very much.
Will it go to the 83 area that was the high of 83.27 back in December of 2017? We've seen so many of these Vs. If they can surpass halfway of the latest big pullback, because it did the one-to-one decline in the monthly after the peak F-top back in July, August of 2016. So I'm looking at this and saying, this is really good action. I like it very much. Would I buy it right now? Probably if I did buy it, I'd only buy a very small portion, but I'd scale in on maybe 2-point dips. That's 79, 2-point dips, 2.5-point dips down to the 75s. Yes, I do like it. And I think it has a little way to go to the upside. And then I think it's a sideways consolidation. Let's go back to our story now. I'm going to go, I didn't do it officially. Let me go to the Dow INDU. This is the Dow trading at, just had another burst of energy. So now this is leg D. I can move that away. Oh, I got my charts back. Everything's in sync. Lovely. Lovely. And this is now leg D in the, it's leg D in the daily chart and the 120-minute chart. Let me show you something very interesting. This leg C has just extended into this week in the weekly chart. And as I'm looking at it right now, there's a trend line that has resistance around about 25,510-ish, and we're at 25,378. That's just a trend line. It doesn't say we're going there. I'm just saying that's where I'd be looking at a trend line. Remember the cup formation, if you get halfway into the previous high of 26,616 in the monthly chart, coming down to 23,344. Remember, the Dow was the only index of all the key major indexes. It was the only index to go to a lower low in April from the February 9th lows that were made, in uniform lows that were made. And that said to me, this is something we've got to monitor very closely. But at the same time, we had the Chapman wave Roman candle said if you go halfway into the wick, you should go to or just under the previous low of 23,360. We've accomplished that. Everything's been done. Now, it's so fascinating. If I was looking at this chart, I remember this years ago, someone I knew said, I could never buy stocks. They were from a foreign country. I could never buy stocks from this country because the banks are so crooked. As long as I've been here, he says that the banks have always manipulated things. I said to him, okay, fine. And then about a day or two later, I showed him some charts of American banks, some charts of the country that he was in. And I said, okay, you tell me which are the charts of your country, which are the charts of the United States of America. And he couldn't tell. You can't tell. So don't look at the news, look at the charts. And the charts are saying leg D's where other things can happen. So number one, it says we've got to be a little bit careful. Yeah, that's what we do in the Chapman wave methodology. Look at those peak Ds. Look at the peak D, what happened in the peak D back at 26,616. Remember, I had a whole webinar on peak Ds, and we just saw umpteen peak Ds, and we had that pullback, that very sharp pullback subsequent to the webinar. In the Qs, the SMHs, you can go right through the list. But at the same time, we had a reflex action that said, whoops, there is buying coming in. So we've had another buy mode, and this buy mode is gone. The first one went to the 25,000. Sorry, I shouldn't say the first one. The one that started in early May went to a peak D at 25,086 on the 21st of May. Pulls back to 24,605. We went long, and we've been long. The Dow since about 24,700. We're at 25,374 right now. Just gone to leg D. I've got a left side, right side price time action that came in on Friday, so it's a little late, and we haven't got there. We've gotten there now in time. We haven't got there in price. We've just missing by how much? By 60 points going to that particular level. So I'm anticipating this is the week. If any week is a week where you could start to see some reversal to the downside, we've got enough activity going on to say, let's be a little bit careful. We're in leg D in the Chapman wave methodology in the daily. Let's be a little careful. The weekly hasn't yet crossed positive. It is just this moment crossing positive, but the week has only just begun. I have to wait all week until Friday before I can confirm that the MACD is decisively broken. The fast-moving average, the green line, the 9-period differential, has crossed positively above the slow, and that's usually a very good sign. Let's go. So parameters to watch. Dow support is obviously at the 25,050 to 24,470, 24,970s. That must be the cushion. A break under that, especially that going under the 9-period moving average of 25,046 would be quite negative. In the meantime, back at the ranch, the daily MACD is good, very strong. The daily stochastics at 93%, very strong. On balance volume, very strong. Weekly chart, technicals, as I say, are improving. They haven't crossed positive. I'm still talking about the lowercase h. They can go to a lowercase m. That's something we've got to be aware of. Still a little bit more room on the upside to go, but I've said to subscribers about 25,500. You've got to anticipate you're going to be testing that 25,800 last high that was made at 8 I'll be right back. Dow's at 57, S&P's at 10. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, just before I go on with the others, I had a couple of questions in the den. I want to get to them now. DDD, which is 3D Systems, this is a 3D printing company. LD daily at 14.33, up 46 cents. It was on my list as a buy, and I kind of forgot to look at it while I was away. I can't complain. We've got some real nice positions, but I missed it. It's leg D in the weekly, leg C in the monthly. What I'd said at 14.32, if it can hit 50 in the next week or so, if it can hit 15.10s and hold, there's a real good chance that the 200-period moving average of 16.16 in the monthly chart will become a magnet. It's a lot of ifs. All I'm saying is it's acting very well. All the technicals are improving. And the daily says that between $13.30 and $12.70. I can see that being the key support level over the next 2 weeks. So that's that. And jazz was another one. All that jazz. 178.20 up $1.41. Very strong. It's these candles, the series of candles. 1, 2, 3, 4, 5, 6. About 13 candles, just small candles, rising highs and every day, a new high and a higher high and higher low. I love that. It creates this little mini channel. That's a very positive aspect. It means that every time there's a momentary pause, somebody is wanting to buy it. Weekly chart is still technically strong, very, very good. And the monthly chart has improved a lot in leg B. I like it, Jazz. This is Jazz Pharmaceuticals. And key support is at 178.20 right now. Key support is at 173.50 9-period moving average to 171.19, and I think that that's going to be. Let me make sure here. Yes, that is the 14-period exponential moving average support. Okay, let's get back to our story. So the gold. So gold was up a couple of points, up 2.2. Nice little action here. Silver is the one that's been much better. It's funny, I keep talking about that. Look, silver broke out, hit the 200-period moving average on Thursday, pulls back on Friday. That was resistance. Today it becomes support. We're trading at 16.94 in silver. Finally, it's getting to, remember, I said, I don't care about silver. I want to see 16.90s to 17.20s. Once it gets to that area, then it should drag the gold a little higher. It's improving. The weekly chart's making now the second U-shaped pattern. Now I can say to you 16.68. Let's go to the 16.60s is key support for silver. But wait a minute. The dollar, which I have to say we are still long, from 90 is at 93.49. It hit 95.03 on the 29th of May. It's just refused to hold the 9-period moving average. That's become resistance. But I love the weekly chart. I think the weekly chart is acting really well. Stochastic at 86%. MACD is strong. 92.91 is the 9-period moving average. I'm just saying, I think the dollar is having a well-earned respite, and gold and silver should benefit here. We'll see. If the dollar does break 92 support, I have to consider that it's going to fail, but at this point not. HG, high-grade copper. I mentioned this to my subscribers over the weekend when I sent out all those charts, even though I was on vacation, still managed to get out a lot of charts. High-grade copper, which I've lost all the notation, is in a brand new leg, 8 to the upside here, holding very well. It's gone from the lower range to the upper range. I said to subscribers, that's very good. If you put it together internationally, together with wood, which is the iShares Global Timber and Forestry ETF, which is at 83.38 right now. It went to a new recovery high, all-time high last week, leg F/C in the weekly, leg E in the monthly. If you put this together, it says that the global economies are still, it looks to me, holding quite nicely here. Message in the den here says, Andrew Lloyd Webber, ALW. Let's see what ALW is. ALW. No, there's no symbol for ALW. Yeah, I did see him last night. I watched a little bit. I must say that was a much better show than the Oscars, but still. All right, now let's get to our nitty-gritties here. I'm looking at crude oil. I want to get these done so we can start the week fresh because I want to give you parameters. Nice turnaround. It was a little weaker earlier. It's up 44 cents. My thinking here at this trough B, it's in a new leg A with 9-period moving average right here at the high of the day of 66. Let me just see what that is. 66.49. It's trading at 66.18. I like it only in terms of saying, now I can put, I didn't have a chance to do that. I've got a down arrow. I've got a sell mode in the weekly chart. That doesn't say you have to go down much more. It says a lot has to happen to reverse from a sell mode to a new buy signal. We got that in the Dow weekly chart where for subscribers, I had to switch from a sell mode to a buy signal. That's all it is right now. It just says, yeah, on the shorter term, we've changed positions so the intermediate term can inflect a little higher. Zag. So parameters to watch. Crude oil takes out 64 support. It will go lower. That whole 62 area is going to be tremendous key support. It has to hold. I think you can have a little bit of a bounce here in crude oil at this point. Had a very sharp pullback from the 72, almost 73 level down to the 64s. I can see a little bit of a bounce. ZAG, which is ZAG Inc. I can't remember what they do. Made a peak C in the A, B, C, a peak D in the monthly chart. Remember, those Ds are so important. In November, it goes to 2370, pulls back from that area to the 11s. Now trading the 16s. Nice day. Monthly chart has improved a little bit. Weekly chart has improved a lot. It's in leg B and leg A, B, C, D. I'm not sure if this is, I'm going to call this an E/B because the technicals are improving enough that I can say there's a chance to go higher. I like it at 1648. I would say to you that the 1530s to 1493 area is really important support. And at the same time, if this can go this week, if instead of pulling back, if there is a market pullback, would I add to a position is a question. I would add to, right at this moment, I would say, if you added, it would be a real short-term trading position. But if you're adding to a core position, I would prefer to see how it handles a pullback to 1573, 1550. And then I'll say to you, yes, now it's ready. But at this particular point, only as a quick trade, I say you can add here at 1648. I would have the tightest stop. I would have a 33-cent stop on this particular issue right now. Why? Because if it just even takes out the midpoint of the day's range, which is at 1655 high and 16 low, if it takes that out, I think it could start to reverse. At this point, it's acting really well. As a trade, I'd put it in, and you know what? You could get maybe 80 cents from this. So 3 cents risk, 33 cents risk, 83 cents upside action. I think there's a trade here. Now I'm going to go to the most important thing in terms of what I'm going to be talking about in my webinar on Thursday. What to expect in the second half of the year. Basically, that's what it is. Whatever the title is, that's what I'm going to be discussing. The second half, what's working, what's not working, what would I be looking at as really key metrics that need to hold or break out for things to change or stay the same. And it's going to be very important. Why? I'll explain why. Look at the TLT. If you go to the, I'll try to get this while we're doing the show here. Recent, let's go to this one here, the TLT. So as the TLT is coming up, let me just talk a little bit about yields. Yields are in the upper range. If the market starts a deeper sell-off, and I'm talking about a 1,500-point sell-off, I give back all of the last week's gains plus a little bit more. If that's going to happen, I would expect that yields would then come down as money flows out of equities, the insecurity of equities, and into the so-called security of bonds.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yes, so a couple of things going on here. Sorry, I talked right through the break. Shows you I'd just been away a little while. I completely forgot. But everything was there, my clock, everything. I just forgot about it. I kept talking. So let me just do this. Yields are going to be very important. In my webinar on Thursday night, and the reason why I wanted to choose mid-June, because I remember distinctly the place we went to this past week is the same place we were at many years ago. I remember being out, beautiful sunny day, walking, had been for a swim, came back, wanted to start working on my next day's newsletter. And I had some internet problems. I went down to the lobby. I remember being in the lobby. That's where the internet worked very well. And I'm sitting there. It was middle of June. And I look and I said, oh, my God, I just got a buy signal. And I had to quickly send out. I couldn't do anything because my newsletter is once a day. But I had to quickly check all the different signals and get ready to prepare tomorrow to say I've got a buy signal. And I remember that periodically we've had a crazy June or a July where the candle was looking just horrible. And then for the last day or two of the month, there was a spike that turned everything very positive. So June is a month and I'm always I'm wary, W-E-A-R-Y, because, or W-A-R-E-Y. Why? Because this is where things can happen because the summer started, everything's slow. You can get turnarounds that are very quick. So here's what I'm looking at. The yields are up in the higher range. You see the 30-year, the white one, TYX, the brown, the TNX, the 10-year, and the FVX, the 5-year, cyan-colored one, all in the upper range. And my thinking is that if there is a market sell-off, it's going to have speed, it's going to have momentum, it's going to have bad news that just filters daily into the market. That's the only way I think you can break really key supports now for Dow, say 24,500 to 24,200. That would be very important. That area, that cushion, if that goes, it has to go really quick. If it goes with speed, and then I think what will happen is that money will flow out of equities into bonds, and therefore you'll get the yields going down. But as it stands right now, I don't care what the Fed is going to say on Wednesday. It seems to me that there is enough evidence, especially I'll go to the financials in a moment, there's enough evidence to say that if the yields are able to hold in the next, all the way through June, with taking out the lows that they made 3 weeks ago, most recent low, that's going to augur well for higher yields. And in fact, you know, there's the competition with the international markets, that is international bonds and any fixed income, where the yields are very low. They copied us. Japan started all. I called it the Japanization of U.S. bond yields. Then we came in with our just pushing money to try to keep the yields lower. And then what happened was other countries start to do the same. And even the countries with really high yields, those yields have come down a lot. So yes, there's competition now. There was competition to see who could get the lowest yield. Now there's a competition to say, well, if the economies are starting to improve, maybe one by one, we'll see yields hold steady to slightly rising. That's kind of the scenario I'll be talking about, what parameters to look for over the coming months, weeks starting off, and then months in the second half of the year. And if you look at wood, the iShares Global Timber and Forestry ETF made a new all-time high at 83.88 last week, pulling back a little bit today, down 2 cents at 83.26. I'm watching this closely. It's in an up channel. It's making higher highs and higher lows. And here is the HGX, this is the Philadelphia Housing Index, up 4 cents at 319.24, made a low of 300 just about a month and a half ago. All-time high was 369.15 on the 26th of January. This is really important. What happens to the home builders? Now let's go back to our story right here. Just for the short-term traders, if you're looking at the ESM, oh, I lost all the notation. Pity. That's an A, B, C. We're just making a peak D. Watch this closely. A move above. We're at 27.88.75 in the E-mini. This is still the June contract. The other one I showed earlier was the September. This June contract, I can still trade right up until Thursday. I can trade this. So in the meantime, back at the range, I'll switch to the other contract in another day or two. But in the meantime, a move above 27.92, a close above 90.72 that holds for two 10-minute bars, and that's for 20 minutes, would be very positive. Any pullback under 27.85, then yeah, 27, closing under 27.85 for 2 bars, says, oops, be careful. And then we've got to be careful about whether or not the day has made some kind of intraday top. Meantime, everything's holding pretty darn nicely. And let's get back to our story here. XLF, I told I said, I got emails about it. Yes, I'll look at the XLF and our usual slew of, usual slew of A. So you made a peak B and then you pulled back, but you held the original starting point low bar. So this becomes a gray leg C. I'm making it a blue leg C, no, a gray leg C in the daily, in the XLF at 28.11. It is kind of stuck. It's making those H patterns, and it's kind of stuck until it can close on a weekly basis above 28. It should be 50. I'm not going to do that. I want 28.75. A close in the S&P Select Financial Spider Fund, trading at 28.11. Any close on a weekly basis above 28.65, let's make it 28.72. It would be really positive, and that'll indicate yes, yields should remain quite high. This is the way I'm thinking. And any pullback under 27.35 would be quite negative and say, we're just stuck in that range. The KRE, this is the regionals I was asked about. Yes, we are long. It's pulling back a little bit today, down 46 cents and 65.28. I like it. It's making an alternate count D or B. I don't know, but the weekly leg C is still strong technically, and the monthly is in leg D. Parameters to watch: 64.30 to 64, key support, and 66.35 needs to get above there to say, hey, you know what? That's probably a leg C and acting well. So those are the parameters. I still like it very much. I think it's the better of the different financials that we're looking at. Question about the IBB. IBB is the Nasdaq Biotech ETF, trading at 110.02, down 9 cents. Made a peak E. Gosh, all those charts over the weekend that I did in such detail, lost. I don't like that. All right, so it's peak E. I haven't got a down arrow because the MACD is still strong. Stochastics at 82%. There's a hint that it could go into a trading band between 108 and 100. It could go test the 112 round number high. Look at that, 112. I'm sorry, the 110.94 high, and try to get to the 111s. If it gets to 111.65-ish in the next 2 days, that's really good action. I'm not sure it can do that. We'll have to see. So, now let me talk about the SMHs. There's that round number high, 112 round number high, peak E, holding kind of steady down 12 cents at 109.85. So we've been long the 3 times long. We had a position and we took off some, and we just got a very small position. Why? Because I want to get a good feel for it. The way to get a good feel for it is to hold your position at this particular point, because just a small, very, very small position. More important, if it breaks if the SMHs take out a certain level, I think it could start a deep consolidation in time and price. And the weekly chart is very strong. Leg A holding very nicely. The technicals have improved a lot. And a peak D at 114.55 in March of this year. Hey, this is a nice V-shaped pattern so far. I'll be right back. Basil Chapman does at 57.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. So I was asked about Bitcoin. Remember, I said, just forget about those 40, 50,000, 60,000 targets that everybody had that on every show I listened to, CNBC, just Fox Business, the works. For those first couple of few months of the year, nobody was talking about major sell-off. And remember, straight after the January the 1st Christmas party next door, it was actually a New Year's party next door, and I went to, they were talking about the crypto coins and all that, and I said, I think you've got to be a little careful. And we went from the 19,000 area down to the 6,000 round number. We're trading at 66.18 right now. Just be careful. A little more pain is going to be felt before this thing can really start to move higher. That's number one. Number two is, in my newsletter, so the webinar on Thursday, it has a number of benefits. now I can actually pull these charts across because I guess my engineer, wonderful engineer, is just reminding me that maybe Microsoft just didn't update and blew the whole thing apart here. Now everything's working beautifully. So this is what I show my subscribers. I show the triple yield chart. I discuss it every single week. This is what you get for free, because if you do my webinar, you need to be a subscriber. But being a subscriber, you've got a month free of my newsletter. I go through the right here. I go through my 5 little quadrants where I look at all the different things and I give the overview and market today and what to watch for. I say, if at 11:30, if the Dow's up 40 points or more, that's very good. If it's down 40, it's not very good. And if it's up 40 going into the, I think I said the 10 past 1 time frame, that means that maybe the market could close very nicely. But we need leg D. I discuss all the indices that are doing well, etc. I do the daily chart right here. I show the 120-minute chart. They needed that leg 5 to the upside and a peak D. Sorry, a leg D. It got that this morning. I show the daily chart. I show, that's that. There it goes. Oh, this is not it. I show just a wealth of information. So go to the front page of TFNN, check it out. You'll see it right there on the front page. It says, webinar Thursday night, Basil Chapman, on what to expect for the latter part for the next half of the year. And it's going to discuss sectors that are working, sectors that are vulnerable, as well as stocks. And it's going to be this time very detailed, as always. But we're going to have some picks, and we're going to add to.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.